watch and learn about financing, types of financing, and financial needs and sources of finance, and lastly, the classification of financial sources. What financing implies. In case of financing, let me write here companies, or business. In every business have various financial needs. They here financial needs is here. And there are sources of finance. Sources of finance. So let's try to understand that what are financial needs of the company, the business. So the financial needs can be classified into three categories. The requirement can be into three types. The first one is long-term requirement, and the second one is medium-term requirement, and the last one is short-term requirement, which we are going to study in a brief details. So let's move on. We are here, financial needs. Let me write requirement. As I already said that every business have various financial needs and there are various sources of finance. So the requirement can be in three forms. The first one is long-term requirement. Okay, the first one is long-term requirement. Long-term requirement are basically funds requirement for the period of 5 to 10 years. Funds requirement, this is. In case of long-term requirement, funds requirement is within the range of 5 to 10 years. And the question arises here, how this requirement can be met out and why this requirement. So they are basically for investment in fixed assets creating infrastructure, creating infrastructure which can be plant, land, and building, machinery, so they are basically long-term purpose and they are basically for generating core income for the business or core income of the company or the business. Okay, as I already uh, stated that how this requirement can be met out. This should be ideally met out from Atlas. Okay, this requirement can be met out from permanent financing. From permanent financing, which we call equity or long-term funds. Let me write in short form, long-term funds or long-term loans, maybe 5-8 years, right? So every business have various financial needs and there are sources of funding too. And the first requirement is long-term fund. Here, first requirement is long-term fund, and the period within the range of 5 to 10 years fund requirement and investing in fixed assets and creating infrastructure like plant and machinery, land and building, and this is ideally or basically for the core income of the business. And how this requirement can be met out? This requirement can be met out through permanent financing or long-term funding, which we call long-term loans for the period of 5-8 years. I hope that everything is clear about that. So let's move on to the next one, which we call medium-term requirement. The first one is long-term requirement, the second one is medium-term requirement, and the third one is short-term requirement. Under the headings of financial needs, that now we are at medium-term requirement. Medium-term requirement. Medium-term requirement, in case of medium-term requirement, basically for a period up to, for the period up to 1 year till 5 years. And beyond 5 years is beyond 5 years is typically claimed as long-term requirement. So this type of requirement basically should be advertising advertising expenses, which we call deferred deferred revenue expenses. And massive campaign expenses, and these are called deferred revenue expenses, and they are classified as medium term. Those expenses are classified as medium terms because they are all within the range of 3 to 5 years. And how this requirement can be made out? It can be made out through medium-term loans, right? So every business have various financial needs. At the same time, there are also various sources of funding, finance, and these requirements classified in three terms. The first one is long-term, medium-term, short-term, and this is medium-term requirement. And medium-term requirement is ideally up to 1 till 5 years. Beyond 5 years is called long-term requirement, and this requirement is basically for advertising expenses, massive expenses, which we call deferred revenue expenses, because it is within the range of 3 to 5 years, and this requirement can be met through medium-term loans, right? Now we shall move to the third one, which is called short-term loans. No, short-term requirement. The last requirement is short-term requirement. Short-term requirement. Short-term requirement basically arranged to meet the requirement of current assets. Current assets. What are current assets? Like stocks, debtors, cash, etc. So for meeting this requirement, those requirements have lies. These requirements have life less than 1 year. Less than 1 year. In case of short-term requirement, it's less than the period of 1 year. And investment in these assets are called working capital. Working capital. As I already explained, in every business, every company, there are various financial needs and various sources of funds, funding, finance, and the requirement is classified in three categories. And this is the last one for financial needs called short-term requirement. Basically, invest in current assets like stocks, debtors, cash, and the period is less than 1 year. And investment in these assets is called working capital. All right. So under the heading of financial needs, we had three types of requirement: long-term requirement, medium-term requirement, short-term requirement that we have gone through. Now we move on to the sources of finance. Sources of finance. For meeting those requirements, what sources are available? First is what sources are available. The first is long-term requirement. Long-term requirement. Under the long-term requirement, sources available are sources available. Sources under the long-term requirement. Sources available are number one, share capital or equity share. Second one, preference share capital. Preference share capital. The third one is retain earnings. Retain earnings. So what is retained earning? Retained earning is profits which were not distributed to the owners as dividends. Only to write that. The fourth one is debentures, bonds. Next one is long-term loans from banks or financial institution. And the next one is loans from state financial corporation. State financial corporation. The next one is loan from commercial bank. Loan from commercial bank. may also call venture capital. Venture capital. And asset securitization. Asset securitization and the next is international funding through euro issue. Euro issue. Or the last one is foreign currency loan. Foreign currency loan. There are lots of sources available in case of long-term requirement under the heads of sources of finance. So as I've already said that every business or every company needs various financial needs, and there are also various sources of funding. So in case of sources of finance, here the first one is long-term requirement and sources available from share capital or equity share, preference share capital, retained earnings that the profits which were not distributed to the owners as dividends, and debenture or bonds, long-term loans from bank, financial institution, and loans from state financial corporation, and loans from commercial bank, venture capital, asset securitization, and international funding through euro issue and foreign currency loan, right? The next one is medium term requirement. Under the heads of sources of finance, now we move on to the medium term. Medium term requirement. In case of medium term requirement, what are sources available for meeting the medium term requirement? Source available for meeting medium term requirement. Number one is preference share. Another source available is debenture, bonds, public deposit. And the next is loans, raising loans from banks or financial institution. The next one is lease financing or hire purchasing. The next one is external commercial borrowing. external commercial borrowing. Next one is foreign currency bonds. So, under the headings of sources of finance available for meeting the medium-term requirement, the first one is preference share, and the second one is debentures, bonds, and third one is public deposit and loans from banks and financial institutions and lease financing or hire purchasing and external commercial borrowing and foreign currency bond. Now we move on to the last one, short-term requirement for meeting various financial needs or sources of finance. What sources are available for meeting short-term requirement? Now we're going to see short-term requirement. What sources are available in case of this short-term requirement? Sources available for meeting short-term requirement of the company or the business. The first one is trade credit. Trade credit. The second one is accrual expenses. Accrual expenses, known as deferred income. And short-term loans like working capital, short-term loans like working capital, FD called fixed deposit, and advances from customer and short-term provision. So for meeting short-term requirement, sources available are the first one is trade credit, second one is accrual expenses or deferred income, and short-term loans like working capital, fixed deposit, advances from customer, and short-term provisions. Now we've gone through that various financial needs and the sources available for company or business. You can move on. Now we are going to see and learn that Classification of financial resources. Classification of financial sources. Classification of financial sources. Financial sources can be classified into three categories. One is based on time period. One is based on time period. Okay. Financial sources can be classified into three categories. The first one is based on time period, and the other one is based on ownership. And the third one is based on sources of generation. Sources of generation. Let me put in short word, okay? Now we have financial sources, three types. The first one is time based on time period, and the second one is ownership based, and the last one is sources of generation. So what is time classification? In case of time classification, we have three sources, that is long term, medium term, and short term. We have three classification, that is long term, let me put in short form, long term sources and medium term sources and short term sources. According to ownership, we have two classifications. One is contribution from the owners. Contribution from the owners. In case of ownership base, we have two classification. The first one is contribution from the owners. So from this contribution, we have two in the form of equity and reserve surplus. Okay. According to this ownership base, we have two classification. First one is owners base, and the other one is outsiders base. In the case of owners, there are true equity and reserve and surplus. So let me repeat that, okay? According to ownership base, we have two classifications. One is contribution from the owners. So from this contribution, we have two in the form of equity and reserve surplus. So this is the classification from owners, and the other is from outsiders. So outsiders can be bankers, Outsiders can be bankers and let me write others. In case of outsiders, the first word can be bankers and the other one is just put it others. Others can be lots of suppliers, credit, accrual expenses. In case of others, suppliers, let me put in the short form suppliers, credit, and accrual expenses. So in terms of sources of generation, we have two. One is internal and the other is external. One is this. In case of sources of generation, we have two. The first one is internal, and the other one is external, internal and external. So internal can be reserve and surplus depreciation. Internal can be reserve and surplus and depreciation. Depreciation. And external sources can be debenture, bonds, commercial loan, debentures, bonds, commercial loans. Debentures, bonds, and commercial loan. And on the basis of security, we have here on the basis of security, on the basis of security, on the basis of security, we have secure and unsecured sources. On the basis of security, we have secure and unsecured sources. On the basis of security, we have secure and unsecured sources. And in case of secured sources, let's just take a look. In classification, we have time, which depends on the solvency of the company, which I'm going to explain later on. In case of security, bank loan and debentures. In case of unsecured, equity and preference. So let's take a look back that in classification we have time. In classification we have time here, which depends on solvency, of the company. And ownership, in case of ownership is based on net worth. net worth of the company. And sources of generation depends on financial financial healthiness of the company, financial healthiness of the company. So I hope that everything is clear. Here we have classification of financial sources, and it's broadly categorized into three: time period and ownership base and sources of generation. So at the time, long-term sources, medium-term sources, and short-term sources. So under the ownership, we divide into owners and outsider. Our owners means equity and reserve and surplus, and outsiders, bankers and others. And others means your suppliers, credit, and accrued expenses. So security. In case of security, we have two forms: secured and unsecured sources. Secured sources is bank loans and ventures, and unsecured equity and preference. So type simply implies that solvency of the company and ownership based on the net worth of the company or the business, and sources of generation implies that the financial healthiness of the company. So that's all for this time. Thank you so much for watching and following me. Please do keep watching, since I'm going to pick up various topics, various subjects which you might interest. Thank you so much. Have a good time. Have a nice time. Thank you.